Hi everyone, welcome to today's video. Last video we saw quick introduction to mutual fund, and today's video we're going to see how one can select a mutual fund that is suitable for their financial needs. With over 8,000 mutual fund schemes, it's really challenging for one to zero in on a mutual fund scheme. But no worries, we are going to solve that problem today. Let's get started. Okay, it all starts with identifying one's financial goals. We all save money not for the sake of saving money, right? We all save for a certain financial goals. It could be for a kid's education, or it could be for making a down payment for your future house, or it could be to buy a new car. Whatever it may be, you have to identify your financial goals. Once you identify your financial goals, the next step is to define how much corpus you need and in how many years. This helps you to find out how much SIP you need to contribute monthly at what rate of return. For example, if you want to generate a corpus of 23 lakhs in 10 years, you need to contribute approximately 10,000 every month at annual return of 12%. You can use the formula shown on the screen to calculate the SIP and rate of return. Okay, now you have identified your financial goals and how much corpus you need to generate and in how many years. Next, you bucket your financial goals into a short, medium, and long-term goals. For example, if you want to create a corpus of 3 lakh for your kids' primary school education in 3 years, then it could be called a short-term goal. On the other hand, if you want to create a corpus within 5 years, then it could be called as medium term. And any goal which is longer than 5 years could be classified as long term goal. For example, saving money for your kids' education in 10 years. And you may ask why we need to classify them into three buckets. Simple. Different asset classes behave differently for a given time horizon. For example, bonds or debt instruments are less volatile during short period of time. On the other hand, equities are highly volatile. And since we are saving to meet a important life goal, we cannot afford to lose our original capital. Hence, we should choose asset class that offer that protection for the given time period. For example, if your goal is short term, that is between 3 months to 3 years, then you should always choose short term or ultra short term mutual funds. If your goal period is between 3 to 5 years, then you can take a bit of risk and then choose a mutual fund that invests in both equity and debt funds, that is hybrid mutual funds. If your goal is long term, that is over 5 years, then you can always take higher risk and invest in equity mutual funds. You can use the table shown on the screen to select a mutual fund type that is suitable for that goal category. Okay, now we know which mutual fund type is suitable for your financial goal, whether it is short term debt fund or equity fund or hybrid fund. The next step is to determine which mutual fund scheme is suitable for us, whether it is HDFC short term fund or ICICI Prudential short term fund, and so forth. For that, let's get into etmoney.com and then check how to select a mutual fund scheme. Okay, have logged into etmoney.com. Go to mutual fund, explore mutual funds. Here you can find the funds are grouped under different categories again. So let's take a example that your goal is for 3 years. Then you know very well that for 3 years we cannot go for equity fund, so we should go for debt fund. So let's click on debt fund. And within debt fund, depending upon the time period, it's classified here. If it is within 1 year, you always have the liquid and ultra short term fund. But our goal is for 3 years, so let's choose the short duration fund. Okay, once you go to the short duration fund, you can see the different funds are listed down based on the ranking assigned by atmoney.com. They use different criteria. Uh, it's based on the returns. Okay, once you get this list, you can always sort it by returns. Always select the maximum duration, in this case 5 years. Then you get a list. Looks like ICICI Prudential Short-Term Fund has performed well. It's given 7.15% per annum in the last 5 years. Click on it. Okay, it's given a return of 8.57 percentage since inception. I think it's over 9 years, better than FD return. Next, you can check the expense ratio. It should always be as low as possible, less than 1 percentage. It's 0.37 is good. And then check the consistency. Yes, it's 8.5% for 9 years. It's very consistent. And then always invest in a fund that is direct. Never ever select a regular fund. The regular funds are distributed via external distributors, and that will have a higher expense ratio and hence low return. So always select direct fund. Okay. Now you know how to select a mutual fund scheme for a given goal. Once you have zeroed in, you can always go to the website of the particular mutual fund and then uh, start the investment over there. It's always best to invest in their website than from aggregators like ET Money, because it might have additional costs. Okay, with this we have come to end of today's video. Hope you found today's video useful. If you like it, please share it with your friends and subscribe to our channel. Thank you.